A study done by the Fraser Institute found that the average Canadian family spends 43% of their income on taxes. So much of our hard-earned money goes towards taxes. That's why it is critical to utilize tax-sheltered accounts like the TFSA, tax-free savings account, because money that makes money can make more money, but money that makes money tax-free can make even more. The TFSA was introduced by the federal government in 2009. Now it's an investment account. I want to make that clear. It's an investment account, not a savings account, that is available to Canadian residents who are of the age of 18 years or older with a valid SIN number. They can invest in this account tax-free over their lifetime. So any Canadian income is tax-free. So like an RRSP, a TFSA is a registered account. And when you hear registered account, that means that it's registered with the CRA. So your financial institution that you're going to be depositing your funds with every year has to report your holdings within these accounts. One of the main differences between an RRSP and a TFSA is RRSPs are a tax deferred tool, meaning you're going to put money away today and you're going to save paying taxes on them now, but on the withdrawals in the future, you will be paying taxes. Whereas with the TFSA, you're using after-tax dollars to invest in this account. So if you're like me and you're implementing a strategy like the Smith maneuver, this is actually a good thing because you do not want your marginal tax bracket to be lowered. And when you're investing in something like RRSPs, your marginal tax bracket is going to be lowered. So there are contribution room limits with a TFSA account. Otherwise, Canadians will just be piling all of their investment funds into this one account. So contribution limits are going to vary depending on your age and how much you've contributed in the past if you have. So for example, if you turned 18 in the calendar year of 2023, you'd be eligible to contribute up to $6,500 because that's the contribution room limit for this year. But there is one caveat to keep in mind. The age of majority differs from province to province. So in some provinces, you won't be able to open a TFSA account and start investing until you turn 19. But your contribution limit will start from when you turned 18. And there is no upper age limit on a TFSA account. So once again, there is a maximum contribution limit and that is age dependent. And on January 1st of each year, you will get additional room added to your contribution limit. And the limit is indexed to inflation. And what happens is it moves up in increments of $500. So if inflation has been ripping like it has been lately, then what will happen is the government will announce an increase in the contribution room limit. And that has happened this year in 2023. The limit has been increased from $6,000 to $6,500 due to inflation. So if you want to find out what your contribution room limit is, there's a few ways you can go about that. There's a CRA hotline number that you can call. You can also go to My CRA login online and see what your contribution limit is, but keep in mind that that number is not always accurate. So I found it's delayed by a couple months, especially in the new year. It takes a couple months for the financial institutions to report to CRA, so there's a bit of a lag there. What I personally like to do is document any money that I put in my TFSA for that calendar year in an Excel document, and I'll be sharing that with you guys as well. You could find a link to that in the description below. I'll put a Google Drive link. And one last point on contribution limits, any unused contributions can be carried forward to future years. So if you're not able to maximize your contribution limit for a certain year, don't worry, that'll carry over to the following year. But let's hope that you can keep on top of this and hammer down and get that account maxed out every year. That way you can utilize the eighth wonder of the world, compounding interest. You can open up a TFSA account with any of the big banks, credit unions, or online brokerages. Now, who should you open your account with? Whichever one you will use. I prefer to use Interactive Brokers for many different reasons. They have very low costs whenever you're buying or selling stocks, and no costs or fees associated whenever you're buying ETFs. And you can also exchange currencies such as Canadian to USD at spot pricing without having to do something called Norbert's Gambit. And there's tons of other features. But if you're looking for a good brokerage house, that's an excellent one that you can grow into, going from a novice to a pro. So you can have multiple TFSA accounts with various banks or brokerages, but I highly recommend that you live by the KISS principle. Keep it simple, stupid. That way you don't make the same mistake I did. So what happened is I had various accounts open and I was trying to amalgamate them all into one. And unfortunately, a rep from TD, when they were transferring funds from TD to another bank, they did a withdraw and a deposited. And what happened is that affected my contribution room limit, and I ended up exceeding my contribution limit. This was, I believe, in 2020. And I ended up having to pay a penalty. I think it was around like $1,200 or $1,400. I ended up getting a letter in the mail stating that I had to pay this. Long story short, I found out that you're able, if you make this mistake once, you're able to write a letter to the CRA, and I'll share that in the Google Drive link below as well. That way, if anyone has experienced that, you can kind of utilize the letter that I wrote and just input your information. And if you make that mistake once, they do give you a kind of a grace period. And luckily I was able to get that penalty refunded to me. So do not make the same dummy mistake that I did and over contribute to your TFSA. Otherwise, you're gonna be subject to that 1% tax on any excess funds in your account. And you're gonna be hit with that penalty every single month until those excess funds are withdrawn and your account is back into good standings. Now let's cover the fun part. What can you buy within your TFSA? So one thing I want to clarify, a TFSA is not an account where you put your money into it and the government is going to invest your funds for you. Most people are going to have what's called a self-directed tax-free savings account. So think of it as just a bucket where there's various investment vehicles that you can put into that bucket, and any capital gains or any income that you make within that bucket, as long as they're Canadian investments or Canadian companies, they're going to be tax sheltered. So let's think of a US company like Kellogg's that pays a US dividend. If that is paying a dividend in your tax-free account, any dividend income is actually going to be subject to a 15% withholding tax. The only way you could get around that is if you hold US stocks in your RRSPs. Some of the different investment vehicles that you can invest within this bucket, which is your tax-free savings account, are cash, GICs, bonds, or mutual funds, which usually generate interest income. You could also own stocks, so individual stocks, and ETFs, which is going to produce dividend income generally. And you can also own REITs or income trusts, which are going to have distributions, which is similar to a dividend, but it's taxed a little differently. And then last but not least, you could also have individual stocks, which you could sell for a capital gain. A couple more points I want to get across is if you have a spouse, make sure that you have them set up as a successor and not a beneficiary. Long story short, but when one of you passes away, basically your account becomes their account. And if you want, you can amalgamate the two into one. And it just makes paperwork and all of that a lot easier after your death. And if you don't have a spouse, then make sure that you have a beneficiary on title for your TFSA account. So I do not use my tax-free savings account for anything that is very volatile and speculative bets. So things like penny stocks or crypto. The main reason is, well, first of all, I'm not a big believer in investing in those asset categories anyway. I'm not a trader, I'm a long-term investor. So I'm just looking to preserve and grow my capital, mainly through dividend stocks. But if that's to each their own, I get it. If that's what you're doing, that's cool. But just keep in mind that if you do make a speculative bet in your tax-free savings account, let's say you invested $5,000 in a meme stock and it loses 90% of its value. And then you sell those stocks at a loss now. So that that $5,000 now is only worth $500. You have lost that $4,500 within your tax-free savings account for life. So you'll never be able to gain that contribution limit back. So it's not like a regular brokerage account where you'd be able to write that loss off with using something called tax loss harvesting. So keep that in mind. That's why it's best to kind of play it safe with your tax-free savings account. Don't do speculative bets. That's my kind of 2 cents. And if you want to see how I invest in my TFSA account, watch that.